Alright, what is going on everyone? Welcome back to the channel Connor on Chains. So, this is actually a very important video that I want to cover as far as researching crypto projects, and I want to talk about Virtual's protocol here and why I have been such an advocate of this project and why it has been so beyond successful over the last month and a half, legitimately outperforming 99% of the market. Probably 99.9%, when everything is still chopping sideways. This thing has been in its own literal bull run here. So I've made this little sheet, whatever you want to call it. I call it the success and value proposition flywheel. There's three main aspects in which I'm, classifying Virtual in. It has had the perfect combination of like 5 or 6 different factors which I'm going to cover in its success at the current moment. So I'm going to start off, we got narrative, the use case, and then the product. So narrative, this is, one of the factors, is the fact that they basically they started by building all the way back in early 2024. They've been building something for a long time. And once the narrative decided to get hot, it started to pop off. Virtual is one of the only projects with a working live product in which anyone can actually go into the platform and create something, and it actually has working framework. They basically front ran the AI agent narrative. They probably saw this months, if not years, ahead of time. And them front running this narrative was huge because, again, for months, AI agents were not even remotely like a thing. Yes, that AI agent narrative was here. People are talking about it, but I don't think a lot of people saw, this kind of potential as far as what these agents can do, as far as even bringing attention to different protocols, being on Twitter with all these agents and stuff. But bottom line, they had a product ready to go that fit this narrative perfectly before the narrative actually popped off. That is number one as far as in this list. And again, it's just like, do they have a live working product before the narrative is hype? They do, or they did. This is something new, fresh, revolutionary that the crypto space can get behind. And I say that because I'm not talking about, can normies and all these people get behind. Because when you're dealing with a lot of newer projects and protocols, a lot of times you're kind of catering to the crypto space, the current retail investors in the crypto space. And Virtual is something that anyone can get behind within the crypto space, but also any Web 2 developer too can, jump in and create their own agents, stuff like that. So it was a perfect combination as far as front running a narrative with their working product. Number 2, so we got use case, which I think is the number one factor in why this has been so successful. Maybe number 1 or 2 is their use case / their tokenomics model. This is so big that I just don't think a lot of people understand, or they don't realize it. So Virtual Protocol is basically operating like it's its own layer 1. It's not a layer 1, it is just a project built on top of Base, more so operating like a layer 3. And the reason why is because Virtual here, obviously this is the native token to the platform, but to actually buy into the AI agents, in which, is the hottest thing within crypto right now, right? You actually need to buy the Virtual token, and you need to swap the Virtual token into agents. You are not swapping Ethereum. You're not swapping Sol, into a native token. Like, you're swapping it from Virtual token, which is the native token to the protocol, then into the agents. So it is a necessity to have the Virtual token to buy the agents, at least when they're new. Because eventually, other liquidity pools get built, so you can now buy different agents, with Ethereum instead of going into Virtual. But you need to buy the Virtual token to actually jump into the agents. and what they call this is liquidity pairing. Every individual agent token is paired with the virtual token in its respective liquidity pool. Creating a new agent requires a certain amount of virtual tokens, which you actually, you need to spend virtual token as well to create an agent. And where there's demand for agent tokens, which I'm going to get into this in a second because this is the other number one factor. Transactions are routed through the virtual token, and this is exactly what I'm saying. Users must swap their currency, whether it's ETH or USDC, into virtual before purchasing any agent tokens. This mechanism consistently generates demand for the virtual token whenever agent tokens are bought, similar to how ETH or Sol serve as the base currency in the Ethereum or Solana ecosystems. So that alone, guys, is huge. So like I said, it basically operates like a layer 3, driving continuous demand to the token. But the thing with it, and obviously it is fully diluted as well, which is very good. But the other reason why, though, the demand is so beyond high for the virtual token, though, is product. So this is number 3, is the viral product, and the product has to be the commodity. So when it comes to virtual token, the virtual ecosystem, you have the native token, but people aren't necessarily flocking to get the virtual token, right? What is hot in the market? AI agents. They are flocking into the virtual AI agents because these agents are now absolutely viral. They're going viral. We've seen AIXBT, Luna on virtuals, all these different agents actually having, real use cases, really building something. And so what that means is that right here, the product is the commodity, which, demand is actually going into the agents that are built on virtual rather than, just buying the utility token, which is what I'm saying here. But the virality is also absolutely key. And when I say virality, it's the fact that when you're making these agents, right, one of the biggest things for people at the current moment, is seeing these agents live on Twitter. Basically, seeing these agents gather consistent attention. And the fact, again, that Virtuals offers this with their agents, so you can actually create Twitters for them, or, you kind of link a Twitter to whatever agent. It's absolutely key to getting more attention into the ecosystem. Then that also drives more demand for these AI agents, and it creates this flywheel. Because again, people are flocking into the agents because of what these agents are doing, built on top of this infrastructure. But you have to route the money through the infrastructure to buy what is hot, and the agents are hot, not the utility token. The agents are what a lot of people are buying into because, again, that's what is hot right now. These 3 things that I've mentioned here are absolutely crucial as to why virtual has been so beyond successful, guys. And this alone, though, I didn't just make this to talk about virtual. This is actually a very interesting, research model to look at when you're looking for other projects, and not even necessarily within AI. I'm talking about, different narratives and stuff, right? Because for me, this is almost like a basis. Now, if I'm going to look for a project that I know is going to pull something like this, it's, you got to ask yourself, okay, well, now we've seen the success of this coin going from, 30 to 40 million when I first mentioned it on the channel in a video like over a month ago, to now 3 billion. How does that even do that, right? And these factors here have a huge effect on why. So, and this is what I'm saying is, if you really want to speculate, think very far in the future about what other narratives can actually pull something like this. I'll give you guys a very good example that is not a full out thing yet. Is going to be, I'm kind of thinking of like some sort of video coin. They have a platform called Dracula app on Base right now, which I'm not going to cover this because I'm not trying to bring this coin up and just, talk about it, because it doesn't fully fit this model. But this is what I'm trying to get at. So think about, you just got to think about what combination of these three things could actually make a coin go from zero to literal billions. And this is what I'm saying with, for a random example, video coins. Fits this narrative. One, you'd be front running a new narrative because, okay, video coins are not a thing, right? I have a feeling, and I know they will be a thing in crypto at some point. But again, you're front running a narrative that is not here yet. Nobody is talking about video coins. People don't really full out see the value in them, even though I do. Does it have a live working product? And again, this is where there's no, I guess if we're talking about this platform that I was talking about, yes, it has a live working product. Is it fresh, revolutionary that the space can get behind? Yes. Are the devs cracked, smart, doing whatever? Devs seem okay. And now if we go to the tokenomics model, so the biggest thing is the tokenomics model, like I was saying. So with this product that I'm talking about on Base, they don't have a tokenomics model like this at all. So it does not fit this use case. But if this, if video coins were going to fit this exact model, what would I be looking for? Okay, well, maybe this platform, if it has a native token, let's say video coin token, right? But when any person creates a video, uploads it to whatever, their app, uploads it to Twitter, it creates their own video coin for that video. But if it's going to fit this tokenomics model, the coin, you'd have to buy into the video coin first, then to actually be able to access the newly created video coin that was just out, right? I know it sounds very confusing, but you basically have to operate kind of like a layer 3 if it's going to fit this tokenomics model, where, again, I'm going to come back to the product, because the product has to be the commodity. It cannot be just the infrastructure token, because with something like this, with video coins, what would be the viral product? It would be video coins. Why? Because it's something the entire crypto space can get behind. Videos are the most common thing that can go viral on any social media, right? And if video coins, you can make money off creating a video, posting it on Twitter, posting it on an app. But again, you can buy the utility token of it. But if they have a layer 3 type operation with this tokenomics model, that means that if you want to actually partake in these video coins, you need to buy that native token first to then buy into those specific video coins that are going viral on Twitter. So again, this is just one idea of me very much so speculating on a perfect market fit for this exact type of success and value proposition within another narrative. You can think about this kind of thing with crypto gaming. Think about it with RWA. Think about it with meme coin, whatever the hell narrative, right? If there's something that can actually fit this use case, again, maybe it's also AI, which I'm going to get into that at the end of this. But maybe it's a completely different narrative. Think about crypto gaming. Maybe there's some, I don't know, some maybe AI gaming combination that you could speculate on. But I'm just giving you guys some random examples. You're going to need a viral product, and it's got to have very good tokenomics. With liquidity pairing is one of the biggest things with it. And then it's got to be in a narrative that is not fully popping right now. To me, these are the biggest things. And then as far as virtuals, this is basically why virtuals was killing it. It's they were ahead of the narrative before AI agents were a thing, with a live working product. The agents were very viral. They're viral as fuck. Virality factor was 10 out of 10. By being on Twitter, it filled the attention gap for maximum exposure daily to the protocol. Their agent framework was good. Many smart devs started to build on it, and great agents have actually been coming out of it, which is showing development adoption. Also, as well as base chain, starting to get a lot more attention with this. And then again, their liquidity pairing tokenomics structure drove non-stop demand into their token regardless of what's happening. But the reason why is because their AI agents are the commodity. The AI agents are what the market wants, you know? And to actually get this commodity, to get the agents, you need to buy the virtual token. That is everything that, you know, I wanted to cover with this. And again, this is why Virtuals has been so beyond successful. But a little bit of alpha, if you are still watching, is I'm very interested. I'm not going to go in depth, but I want you guys to research this coin. AIRig Complex. This is an AI agent based play on Solana. Very interesting coin, and the reason why I like this is because there is potential for AIRig Complex to be the virtuals of Solana, because their tokenomics model is going to be very similar, and it's going to operate in the same exact way. You know, obviously it's pretty high in market cap at 160 million. And, you know, I'm giving you guys this right off the bat. You know, I'm holding this, kind of just got into it, but I'm trying to give you guys this stuff, you know, as I'm really diving deeper. I think this has a ton of potential, but again, very, very high risk. But again, if this project can actually deliver on what they've said, that's going to be the biggest thing, because this is why it's so high risk. They don't actually have their infrastructure in place, but they've said that they're going to have liquidity pairing, which would be the same exact success and value prop as virtual, but it's going to be on the chain with the most liquidity in the current market, you know. And again, if it's really good, there's no reason why I can't see this thing, you know, going way higher from here, right? So that is what I wanted to cover. Just giving you guys a rundown of why this project is so successful. There really have not been any projects that operate in this manner in crypto at all, you know. And I think honestly, if you're any project in crypto right now, and you were trying to operate, you know, in an actually successful project that is going to pull something like a virtual token did, you need to understand this kind of thing, because especially with this, a lot of this focuses mainly within crypto, you know, because, you know, most of the target market when you're talking about the crypto space, bro, you know, you're not always trying to target, you know, Web 2 people. Meme coins, yes. You know, when you're dealing with something like this, it's like a lot of this is targeted mainly to crypto native people. You got to keep that in mind as well. But, you know, outside of that, guys, that is what I wanted to cover. I hope you guys found some value in this, but again, keep this as a base framework where if you start to look for new projects, if they follow a lot of these things, again, one being early, having really good tokenomics model, and again, even good dilution, you know, not necessarily like the most important aspect, but I mean, something to always keep watch for. But then also, again, not just a product, but a viral product, something that the crypto space can just start jumping after because it goes viral left and right, you know. So pay attention to these three factors when you're looking into new projects, and I swear you will find an absolute fucking billion-dollar gem if all three of these things fit. So that's what I got for you guys today. You know, to me, this has just been insane learning about virtuals, watching the growth, you know, and the growth of the ecosystem as well. But again, I appreciate you guys watching, and I will see you guys in the next video. And also, yeah, it's literally Christmas tomorrow. So shout out to everyone celebrating Christmas. Merry Christmas Eve, and I hope Santa brings you some goodies. So I appreciate it, and I'll see you guys in the next video. Thanks.